See these levels here? You know, most of the time, what do these levels represent on a daily basis on SPY? A little narrower range here. See? What do these levels represent? Well, support and resistance. So my question is, though, why there? Why is the resistance level here and not here or here or here? Why there in particular? Yeah, so, well, trapped buyers, very interesting way of describing it. So you have a number of because of the zero DTE phenomenon. Okay, what I'm getting into here a little bit is the essence and genesis of convert the vert is the zero DTE phenomenon. So a year or two ago, you could only trade, or maybe a few more years, maybe back, you could only trade zero DTE, meaning Friday, really. It used to be just Friday expiration. In fact, before that, it was just monthly. But just let's talk about weekly options, right? Weekly options used to expire just on Friday until they introduced zero DTE. And zero DTE allowed for Monday, Wednesday, and Friday expiration. What does that mean? That means not only can you do a Friday, you could do a Wednesday expiration. So you could buy it on Tuesday with a Wednesday expiration. You could buy it on a Wednesday. Now listen to this. You could buy it on a Wednesday and sell it Wednesday and take advantage of that huge volatility on the day of. You could buy it on Friday morning for Friday volatile expiration. That's called 0 days until expiration. And then they had the cash index of the S&P 500, which is called SPX. Used to be Monday, Wednesday, Fridays. You had to pick one. And then they changed that to every single day. Tuesday, Wednesday, Thursday. So imagine for a moment that traders that like to trade during the day, whether it be day trading, futures, whatever, now have the opportunity to trade the day of expiration every day. Can you see how the volume of trades would increase ridiculously? Like a ridiculous more amount of volume would come into the market if traders had the opportunity to trade every single day, zero DTE, where the volatility is the highest. Can you see that? Can you kind of like mentally understand that? I would think you could, right? So what happens is that since you can trade the SPY and SPX and the Qs and IWM every single day, that's why I show you the box of the day, because they're trading it today. Maybe they put it on back here. Maybe they put it on here. Maybe they bought calls here. But for shit sure, they bought calls today. T-A-D-A-Y. Today. Right? They did it today. 0 days till expiration. So you're right when you say support and resistance. You're right when you say supply zone, buy zone, although I'm not interested in that. That to me, that's just another term that's used out there way too much on the internet, and it doesn't make sense to me. It doesn't help me at all. What helps me is to know that if I look to my right and I see the number 600 right here, what do I know? I know that there are a lot of 0 days till expiration, meaning today's expiration at 600. So there's a ton of 600 calls. And if I go to the options chain, I will see them. I'll see the 598, 599, and a bucket of them at 600. So the market maker has an incentive to not let price get above 600, because if he does, if they do, then those 600 calls that were bought this morning or yesterday or whenever will end up being in the money. And if they're in the money, he has to pay them. Or even worse, what if they exercise the right to the call option, the options contract? Well, then he's got to deliver shares. What if you got 10,000 calls? 10,000 calls is 1,000,000 shares the market maker will have to deliver. Do you think the market maker wants to deliver 1,000,000 shares at $600 a piece, but have to buy them at 601? Don't think so. That would be $1 million loss. Don't want to do that. So then when does he buy them? Well, he buys them down here. Understand? So if there is an abundance of 600 calls sitting here, the market maker down here is going to buy a fuckload of shares, which drives the price up. And what that does is two things. Number one, it gives the market maker a crap load of shares just in case. But the second thing that it does is it deals with the lower level. Why this level? Why this level? Why is this the low? Why is this the low? Why is this the low? Because that's where the majority of the puts are. People who bought out of the money puts. So when the market maker buys the stock to drive the price up, to make sure he's got enough shares to handle these suckers if for some reason it ends up in the money, it scares away the put holders. Holy shit, I better get out. Because he doesn't want to have to deal with them being in the money. But then, look what he does. Once it gets up here and he's got enough stock and the put holders have been extinguished by this move to the upside, what does he then do? He dumps it in the middle of the day. Why? So he doesn't have to pay the call holders. Equal opportunity dream killer. The calls get slaughtered and the puts get slaughtered in the same day. You want zero DTE, you better pick up the Convert the Vert product, because you're going to get killed if you try to buy calls and puts and hold them until the end.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.